Hello and welcome back, traders. We've had a turbulent trading session, and the closing bell has just rung. So, the question on everyone's mind is, did our morning prediction hold up? In our pre-market analysis, we called for a flat to negative day for the Nifty, driven by very negative global cues. We warned of defensive action and key support levels. Now, it's time to do the post-mortem. Let's break down exactly what happened, level by level, and see where the opportunities were. The final tally, how bad was the damage? Let's get straight to the numbers. As you can see on the screen, the Nifty 50 has closed at 25,894.70. That's a fall of 0.46% from the previous close. Now, a 0.46% drop might not sound like a crash, but in the context of a global sell-off, it actually tells a story of relative resilience. Remember, there was down a massive 1.19%. So, while we were negative as predicted, we didn't fall as sharply as our global peers. This flat aspect of our prediction came from this relative outperformance, but the negative bias was clearly the dominant theme throughout the day. Price action review, the story the chart tells. Now, let's overlay our morning prediction with the actual price action we see on today's chart. Our morning resistance zone, 26,015 to 26,100. What happened? The market clearly respected this as a ceiling. We never even came close to testing 26,015. The day's high was likely around the 26,075 to 26,100 zone, which became the selling area we anticipated. This level held perfectly, just as we mapped out. Our key support levels, the downside journey first support, 25,900. This was our first line of defense. The chart shows that the index broke below this level, which was our confirmed signal that the bears were in control. This was the trigger for the further decline we anticipated. Crucial support, 25,800. The selling pressure continued, and the Nifty breached the 25,800 level as well. This validated our negative bias and opened the door to our next target. Final support or the close, 25,894.70. Notice where we closed? We didn't crash to 25,700. The market found some footing and managed a slight bounce to close above the 25,800 zone, but firmly below 25,900. This is the flat to negative prediction in a nutshell, a definite down day, but not a panic-driven collapse. Prediction report card. What we got right, so let's be honest and grade our morning prediction. Direction, flat to negative, A+. The market closed negative, exactly as the global cues suggested. The flat aspect was seen in the fact that the fall was contained and not as deep as it could have been. Key levels, 25,900 break. The break of 25,900 was the key tradable move of the day, and we highlighted it as the critical bearish trigger. This provided a clear signal for short-side trades. Global cues impact, A+. The negative pressure from the US and Asian markets was the primary driver, just as we explained. Our analysis that the Nifty wouldn't be able to ignore this was spot on. Trading strategy, we advised selling on rises and looking for shorts on breaks of support. Anyone who followed this would have navigated this down move effectively. The prediction wasn't just a guess, it was a roadmap, and the market largely followed the path we laid out. Key takeaways for tomorrow. What does today's action tell us about tomorrow? The trend is your friend, the short-term trend has turned negative. Until we reclaim and hold above 25,900, the path of least resistance is down. Though new resistance becomes 25,900, the level that was support is now resistance. Any bounce tomorrow will likely face selling pressure at 25,900. Watch the global cues overnight. Just as they dictated today's trade, the US market movement overnight will be crucial for our opening tomorrow. If they stabilize, we might consolidate. If they fall further, we will retest today's lows around 25,800 and possibly 25,700. The battle lines for tomorrow are now drawn at 25,900 on the upside and 25,800 on the downside. Conclusion or sign off. So, there you have it. A classic, flat to negative, day that played out almost exactly to script. The key was respecting the global narrative and trading the break of our identified support levels. I hope this post-market review adds value and helps you connect the dots between pre-market predictions and live market action. If it did, please support the channel by liking this video and subscribing for your daily dose of market analysis. Let me know in the comments, did you trade today's down move? What are your levels for tomorrow?